Welcome to the Builder's Risk Outlook. Coming out of 2022, 2023 has yet another year of a little bit of economic uncertainty around the construction industry. Looking at a few of the negative trends coming out of the end of last year, we see January housing starts dropped roughly 4.5%, which still puts us at about a 1.3 million unit annual pace. However, that's the fifth month in a row where we've seen a decline in housing starts. Ultimately, single family is down roughly 27.5%, while multifamily is only down about 8% over the last 12 months. Single family permits during that same period really are down about 2%, marking the 11th straight month in a row that those numbers have fallen. Total permits did gain some ground, around 2.5%, primarily due to an increase in multifamily starts. Typically what that means is we're going to see condos and apartments kind of surge through the remainder of this year as we begin to fill that housing demand or that need that's out there. It's not all negative. We have seen a few positive trends. Both materials and labor seem to be less scarce, which is certainly improving the building cycles. One good thing that's come out of this slowdown is ultimately it's allowed those supply chains to come back online. Another positive trend we've seen is builder confidence has risen 2 months in a row. It actually jumped 7 points in the month of February to roughly 42. This improvement could be short-lived, however, as in recent weeks we have seen an increase in mortgage rates. Looking forward to the remainder of this year, we expect a few things to happen. One, we still see the consumer price index at or near about 7% with a target rate of 2%. The Fed is most likely going to increase interest rates at least 2 times over the next 3 months. We expect roughly a 1/4 point increase during that time period. The tight labor market is also having an impact on that inflation and could lead to yet a third 1/4 point increase later this year. However, at the end of this year we start to see some slowing with respect to the consumer price index. We do anticipate sometime in mid to late 2024 we could see the Fed reduce rates, which would bring construction roaring back as we go into the end of 2024. All in all, what we are seeing here is we'll call it a gap year for residential construction. I think a lot of work's going to get done, a lot of catch up, but ultimately we're not going to really run into the next explosion of growth until probably 2024. See you next time.